Hey everyone, welcome to Big Markets Think Simple. Is there a service you pay for every month without really thinking about it anymore? Netflix, YouTube Premium, that kind of thing? Long before subscription economy became a buzzword, one company was already collecting cash from living rooms across South Korea every single month. That company is Coway. A water purifier rental running $15 to $22 a month built a company doing nearly $3.7 billion in revenue. We all thought it was just a water purifier company. So how did it get here and where's it headed next? Today we're breaking down how big Coway really is, how it got there, and where the market views it now. Let's get into it. This video is not investment advice. It's for educational, entertainment, informational purposes only. I'm not a financial advisor. Please do your own research before making any investment decisions. Any investment decisions are your own responsibility. Say Coway, and most people picture a company that rents out water purifiers and air purifiers. But the numbers tell a bigger story. In 2025, Coway's consolidated revenue hit around $3.7 billion, with operating profit near $650 million, a 17.7% margin. For every $100 in sales, about $18 is left over after costs. Most manufacturers are lucky to keep $5 to $10. But the more telling number isn't revenue, it's how many customers keep paying every month. Domestic rental accounts grew from 6.01 million in 2021 to 7.29 million in 2025. Add overseas accounts and Coway now manages more than 11 million worldwide. Overseas revenue is climbing too, from 33% of total sales in 2021 to 38% in 2025, growing 22% that year versus 11% domestically. More than half of Coway's 5-year revenue growth came from abroad. Then there's the number that stands out most, the cancellation rate. Most rental or subscription services see 2 to 5% monthly churn. Coway's dropped from 0.72% in 2021 to 0.36% in 2025. Out of every 1,000 customers, only 3 or 4 leave in a month. So how does the company this big keep growing while barely losing anyone? The answer is in how the rental business actually works. The core of the business isn't the water purifier, it's the Cody, the person who keeps showing up after installation. Most appliances end the relationship once you buy them. Coway doesn't. About 12,000 Codys visit homes every 3 to 4 months, swapping filters and sanitizing every corner. That ongoing care builds real trust. Customers feel like someone's looking after their health without them lifting a finger. Once that trust is there, switching brands gets hard. Coway leaned into that trust to expand. A Cody servicing your water purifier suggests adding a bidet or air purifier, and customers say yes. That's why the average number of Coway products per household keeps rising. The clearest recent example is BEREX. The pitch, "We'll take care of your sleep too," moving Coway into mattresses and massage chairs. Mattresses last years but are nearly impossible to clean yourself, so Coway sends Codys to sanitize them regularly. 3 years after launch, BEREX passed $530 million in sales and reshaped the domestic mattress market. In 2026, Coway goes even further, into medical devices, launching Therasol, a device for treating urinary incontinence. Why would a water purifier company make medical devices? Because the formula fits. High price, repeated home use, regular maintenance, and a natural monthly payment product. It's the same playbook Coway spent 30 years perfecting, now applied to healthcare with elder care as the long-term target. One household with a water purifier, air purifier, mattress, and medical device all from the same company means lower marketing costs, higher revenue per customer, and fewer reasons to leave. A big reason the cancellation rate stays near 0.3%. Does this model work outside Korea?
Coway exported its rental system abroad with very different results by country. Malaysia is the clear win. Coway entered in 2006, got its purifiers halal certified for the majority Muslim market, and brought over the Cody model as is. By 2025, it held more than 60% of Malaysia's water purifier market, generating about $1.04 billion a year, 75% of Coway's entire overseas revenue. Thailand took a very different path. Coway entered 21 years ago and only turned its first annual profit in 2024, after years spent building a rental culture, a Cody network, and a reliable payment system in a market with low credit card use. The patience paid off. 2025 revenue jumped over 38%. Indonesia also posted its first profitable year in 2025, though high infrastructure costs across its islands and lower income levels make it unclear whether that growth turns into stable profit. Vietnam, the newest market, is still absorbing early losses amid tough competition. The U.S. is different again. Beyond home visit rentals, there's real demand for buying outright online and self-servicing filters, so Coway runs both models there side by side. Overseas growth wasn't won overnight. Malaysia moved fast. Thailand took 2 decades. The current numbers reflect that long wait finally paying off. So how does the market see all this? Optimists point to the steady, recurring nature of the business, over 11 million rental accounts paying monthly, plus a low cancellation rate that keeps revenue from swinging with the economy. Domestic accounts keep growing, BEREX is a real new growth engine, and Thailand and Indonesia have joined Malaysia in turning profitable. Coway also returns about 40% of earnings to shareholders through dividends and buybacks, which investors like. The cautious view raises different points. The domestic market is close to saturated. Most households already have a purifier, and it's unproven how long BEREX's growth holds up. Overseas remains uneven. Malaysia worked, but Thailand took 20 years. Indonesia and Vietnam are still early, and the U.S. shows how hard the model is to transplant where rental culture doesn't already exist. There's also financial lease receivables to watch. Since Coway hands over products up front and collects payment over years, these receivables passed $3.5 billion by the end of 2025. Collected on schedule, that's future cash, but rising delinquencies would mean more borrowing and bad debt. What matters isn't the contract count, but how reliably that money comes in. Finally, there's the cost side. The 12,000-person Cody network is powerful, but expensive to maintain, and pushing new products like BEREX or Therasol with heavy discounts or commissions could grow revenue while squeezing actual profit. Put simply, optimists see new growth engines building on an already proven cash machine. Skeptics say it's still unclear whether Coway has fully cleared the limits of domestic growth and overseas uncertainty. Which view wins out will come down to the numbers ahead. Coway wasn't always this size. During the 1998 IMF crisis, the idea was simple: let people pay for a water purifier monthly instead of all at once. That's how the rental business began. Ownership changed hands several times since then, from Wongjin Group's founder Yoon Sak-gum to a private equity firm in 2013, back to Yoon in 2019 only to go up for sale 3 months later, and finally to gaming company Netmarble in 2020. Through it all, the core engine never stopped. Coway kept visiting homes and collecting monthly payments. Built on that foundation, Coway is now pushing into mattresses, massage chairs, medical devices, elder care, and new markets abroad. Will Coway stay a steady water purifier rental company or grow into a life care company managing daily life worldwide? What's your take? If you enjoyed this video, a subscribe, a like, and hitting notifications would mean a lot. Thanks for watching.